You take it back.
So, Scott, I gave you all these headwinds facing the financials, and a lot of people are saying we got to have the financials in this market to keep this economy going, to keep this rally going. They just started to come back a little bit, but can that be sustained?
Well, as long as it's not it's a headwind, okay? And you know what? We've been able to make money in a lot of other groups besides the banks, and I think the market knows that the banks are not the place to be. At times, it's a huge headwind and a drag, but sometimes they actually lift, and that's when the market gets a little bit of power. And these financials have been horrible, and we're still at 1340 or so on the S&Ps. Could you imagine if the banks just get a little bit of a lift? We're going to be at new highs. So the question is, was last week's action there a little bit of a bounce, or does it create a bigger trade? But with all those headwinds, it's hard to believe that it's going to be more than just a bounce. So we have to look at areas of resistance in order to see, where they could possibly go.
Well, let's talk about Goldman Sachs, because apparently J.P. Morgan thinks that things are going to be good over at Goldman Sachs. They upgraded them.
Well, you know what? Down here, it's not a bad idea. We've talked about that bearish pattern in Goldman Sachs. It had the measured move, so down here, it's worth a tactical shot. So if you look here at Goldman Sachs, this was that macro pattern. When it broke this, support, it had a huge move lower. You look on Friday, this lower pivot, this was a nice trade for the active trader. Question is, can it get above 142? And then will it ever be able to get above all these moving averages that'll come down? So I think that Goldman Sachs has some room from about to 142, but I wouldn't be selling anything that you bought around this 145 to 147, or at least look there to see the action, because that to me will be the easy part of the bounce. That'll be the fast money trade. Then from there, the question will be is how does it hold up and can it be sustained?
All right, well, what about J.P. Morgan and also Bank of America? As I mentioned, Bank of America, they could have $2.2 billion of at-risk loans that aren't covered by any settlement.
Well, let's go to J.P. Morgan first, which has been the class of the banks. And J.P. Morgan, we've tried to be long. I've tried to make cases to be long, and we keep getting stopped out. This time, J.P. Morgan held the 200-day and bounced off it. I also don't think that this is anything compelling right now. It tried to hold this lower pivot. I think there's going to be a massive amount of resistance in this 43.70 to 44 area. So if you are long from here, you better sell some here. And then if it goes sideways, maybe it'll contend with these moving averages. But so many of these headwinds are in the way, I wouldn't treat this more than just a bounce. And with Bank of America, we talked about last week, it's been just bleeding lower, and finally there's a little bit of life in there. I also think if you take a look at the chart here, it's broken. And can you see a move from 1150 back to 1250? That's going to be the area that you need to sell some, and then we need to start seeing some real fundamental changes in the housing group and these banks in order to stay there.
All right, I'm not sure if we're going to see those fundamental changes, so let's talk about CIT. Is that one looking a little better?
CIT, a little bit of a different story here. This actually broke through moving average, broke through this area here. I think they have a little less housing exposure, so this could see a move to 46. I think also with the banking in general, you don't really need to be in any of these, but this one actually acts a little bit better. I'm not going to get into the credit card issues, but again, those have been acting better. The financials with the least amount of housing exposure are the ones that have been acting a bit friskier. But as far as, like you said, I just think they're a trade.